Now, taking a look at this daily chart of the Euro US dollar, of course, the inverse relationship to the dollar index. Okay, a weak dollar index has allowed the Euro US dollar to bounce, and this bounce has taken us from what is a pretty decent floor here at 2500 to the bottom line of the wave, and then beyond. It's actually gone beyond it, as you can see. Now, the validity, which is where this trade would still be actionable, still be somewhere where you can still consider playing a short, is from this bottom line. Okay, from this bottom line of the wave right there, and it's actually valid to the top line of the wave, but our point of validity, in other words, where this trade is no longer valid, POV, is basically the top line of the wave. I'll just use some shorthand, TLW, plus 5 pips. Alright, so even though the prices continue to rise, to move higher within the wave, they haven't yet hit any kind of POV here. That's what my stop loss would typically be. At least that's the first consideration as to where the trade is no longer valid, which is what a true risk-based stop loss should really be. So while that may not be a stop loss that we eventually use, we could do what I call cheat in the stop. In other words, realize that the point of validity is up there, but we want to take a shot at the trade. We may not be willing to take the heat that would be potentially necessary, but we're willing to accept the fact that we're not using an ideal risk management placement, but at least give ourselves a shot. And for that, I always recommend using either the middle line of the wave or near-term highs and lows. Now, near-term highs and lows are better. Okay, we have a near-term high. The last time the prices rallied up through this level here at 3000, which is what this line right here is. Okay, that's 3000. The last time we got above there, we went all the way up to this high here of, and I'll tell you what it is right now. Let's see, 3116. That looks to be about right. 3116. And just bear with me a second. Okay. So, with that in mind, this high that we had back here, even though we are looking at a pierce of the 000, the market has been capable of climbing much higher. Today's high was 3081, respecting the minor psychological number of 3080. And in terms of cheating in a stop, are you really saving yourself that much by going with a 3116? Not really, are you? Not really at all, if you ask me. I don't see the big benefit to that. Okay, I don't see a huge benefit to that at all. So, as we continue to determine what are going to be the factors that'll push this market lower, well, again, we need some dollar. Well, now that we had the dollar weakness that got us to the wave to begin with, we need the dollar strength to get the follow through. And swings are funny that way. Swings require a correction and then the trend to resume. So what am I talking about as far as the trend resuming? Now, we know what the correction is. What's the trend resuming here? I need the dollar to start rallying up, which technically I would also need the crude oil market to continue falling. And then the trend I need to continue on the Euro US dollar, the one that I'm playing short on, is this weak trend. I want the Euro US dollar to continue with its overall trend. How do I measure or even identify its overall trend? The direction of the three lines here, the 34 period exponential moving average, one on the high, one on the low, one on the close. I want to see that continue to head down lower. I need that trend to resume. And that's the only reason this trade is valid in the first place. To short the bounce within the context of a trend.